This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It's Monday morning, and we will start the week. At this point, if you look overseas, you see that Europe is basically green. This has been a bright spot. A lot of analysts are coming out saying put some European exposure on. If you look at the chart here of the HEDJ, you will see that this is almost, pretty much proxy for the DAX with a hedge. It is above all the moving averages. We talked about perhaps putting on some risk versus 6250, and now it's holding higher again. So I think that if this starts to take out this 66 resistance, you could see Europe becoming a tailwind again and not a performer. So if you want to maybe even buy some of this versus just say 64, I think it's a good idea. As far as Asia is concerned, we've been talking about the potential volatility there, and there were a lot of reports last week thinking that the Shanghai resolves the lower range to the downside, which could have been a problem over the weekend, but instead the weaker data there got bought. The Shanghai is up about 4.9%, so maybe it takes it out of the danger zone. If you look here at the FXI, you will see this lower range was getting tight, okay, and the question was, would it resolve to the downside below the prior pivot here, below 39, or would it bounce a bit? So I'm sure this will be up today, and who knows where it gets up to, but you have some resistance around 42, and then the 200 days a little bit higher, but all of a sudden away from here, at least it keeps it out of the volatility eye. And as far as volatility, our markets had a lot of it last week, or at least it was just one of those rough weeks where lots of sectors got broken, lots of big name stocks lost their 8 and 21 day, and there was just no momentum. So the question is, futures up 7 to 8 handles this morning. Can you buy that, or will people try and short it? So what you want to do is you want to pretty much map out resistance 1, 2, and 3 in various spots to see which ones get reclaimed and which ones get rejected. So if you go first to the chart of the SPX, you will see that this range that's been intact for the majority of 2015 is still there. Yes, it's lethargic, and there's been spurts, and it's been pretty frustrating. But the bottom line is, this 6 year of a bull run, hard to get up and go without the right environment. So anyway, if you remember last week, we talked about this wedge type formation that was the apex within this overall channel, where you had the top end 2130, bottom end around 2040. Well, it broke to the downside last week when it took out, 2095. So where are we now? At this point, the lower end of the range held. So you have 2067 as support. And now we'll see, do we retest the apex, and how does it treat it? So as of right now, it's above Friday's high. So you probably want to write down 2082. All the moving averages are right here. So the question is, does it retest there, get rejected, and then break the bottom end of the range, or does it just pop back in, and then do we see a lot of the same moving forward, which would be a lot of range type trading? On Friday we did see the jobs report, and it was somewhat strong. It wasn't blockbuster, but enough to keep people thinking that September could happen for liftoff, which I think the institutional guys want September liftoff. The market emotionally feels like it may not be ready, but we'll see. The camp that's saying 2 rate hikes, I just don't believe we're strong enough for that. I'm hoping 1 and done. The question is whether it's September or December. Now, as far as other groups to look at and trade, there's really just not a lot of awesomeness going on. You have more bearish than bullish action, and the cues that were leading, kind of fell back pretty hard on Thursday. If you look at the chart here coming in, looked pretty decent, right? You were getting a wedge above the upper end of the range. Looked like it was going to try and hold, this 109 area, and then boom, this wide range bar on Thursday, engulfed this entire spot. So with that being said, it did do a small red dog reversal on Friday, very small one, and now the Qs are above Friday's high. So the question is, just like other sectors, what gets reclaimed or rejected? Where does it see? Moving averages are curling down a little bit closer to 111, 111.20. That would also be 50% of that range down. So, do we just, repair this bar and stay in this range, or does it get rejected for lower prices? We'll watch that. The IWM's been very weak. We've talked about this many times. You look at this false breakout here in the IWM, and just goes to show you that, when that happens, it's distribution. You better be careful. You had a move down, you had a retest. This was your better selling spot. And, now it's all, it's below the 200-day. You had a small little, bounce Friday. So I guess there's some room to 121.26 or 121.57. But, we'll see if that gets rejected. It's below all the moving averages. This is not a source of relative strength. And even the IBBs, it had that really nasty move down last Thursday. Happened fast. One level that gave way was right here. This was like 378. Okay, if you were fast, you could have got out of the way right there. Another level was when it broke the 50-day for the first time on that Thursday. And some actually even made money short. Look at this little trend that broke. Then it broke below this, 369 and held 361. So now the question is, this rally back, if we see it in the next session or so, does it get sold or does this get reclaimed? So I'd write down 375 to 377. If you shorted this and you covered on Friday, maybe you could, sell a rally at 377 if that's what you do. But if this gets reclaimed, like we've seen some other times, like this looked pretty harsh. Remember this down move? Okay, went sideways for a while, rebuilt, and then started a new trend. So at this point, we got to see what happens there. And then you go to now some individual names in high beta tech. High beta tech, has been very tricky to say the least. As far as what's the best name out there that looks good, Netflix for now. Netflix for now, that's pretty cool. Maybe they should coin that. Anyway, you look at the chart, it's been unbelievable. The last 3 days definitely had some volatility, but overall still above the 8-day, above the 21-day. This was a nice little breakout spot there. Now, if it could hold this, 120-ish area moving forward, at some point, if the market ever wants to get good again, perhaps there's another trade, but I would give it some time. The moving averages are catching up, but this is one of the best looking charts out there. I will say that Google and Amazon have been very tricky, very hard. I don't care who you are or how you're playing it, but you had the big gap up on earnings, and they built, they put in these ranges. They looked like they were getting tight, and then all of a sudden, false moves both ways. So to me, I'm not that excited. I'm not in any rush to play these names, to be honest. You have this little spot here as support. This is when I thought maybe, it could start to come back into play, after, breaking this small wedge to the downside and, and holding the majority of this area. So right here, it's just going to take some time. Who knows? Look how long it stayed in this range down there and drove people to drink. But anyway, here's your support 658. I guess if it wanted to try again, to get stronger and get some momentum back, it's got to clear 669, but I'd be careful and not in a rush. Same thing goes for Amazon. I remember last week we tried right here. It was very tough on that Thursday, right before the market, where the bios got hit and some momentum left. It looked as if we were going to get a nice trade here above 540. It traded above it and then failed, and then actually some were like, foaming at the mouth. Now it's going to fill the gap, and it did come in a little bit and didn't do much. It broke below this, 523, hit 518, and now it just looks a little, loose and wide. So you want to open it up, maybe use your 3 and 5 minute charts. You now have this range, and again, look how long it was in this monotonous range before breaking out of this. So anytime you feel like you're in a rush to do something here, just think again. And there is movement on the 3 and 5 minute chart within these ranges, and you could see little bouts of relative strength and weakness to make cash flow. But if you're expecting some kind of big move, I just don't see it yet, but we'll see what happens here in the next few sessions if, the rally builds. As far as Apple, below the 200-day now for multiple days. This channel, it fell out of the channel, over a week ago. Here's your top end of the channel, and then you had your earnings. Remember this big gap up with the hole, okay, giving you some clues to be careful, and then it broke this 122. So now you have a lower wedge, okay, below the 200-day. So, if someone were to say what happens first, okay, I kind of think that at least a retest of this happens first, where it clears this, 116.50 and sees 118 or 119, before breaking below the lower end of this range, and where some people think, we're going to see 105. So right now you have this inside wedge here. If it can get above 116.50 with some authority, perhaps there's an active cash flow trade to retest this, 118.70 area. And if they want to push the envelope and the market really wants to rally, maybe even 121.50. But we'll figure that out, and that'll help give us some clues for overall tech. As far as people are asking about Tesla. Tesla's in the penalty box. Tesla and Fitbit, both of them, had earnings and they were sold on it. You look at Tesla, and at this point, it's going to need some time, to hold the 200-day. I think it's down this morning on some kind of article from the Wall Street Journal. We don't take stock into earnings, so no one pretty much got caught in that, or some people don't, or you take options. 236 is what you want to trade against. FIT had a decent report, but after doubling, it wasn't enough to hold it in there. So now we'll see how much time it's going to take to rebuild above this 42, okay, below both these moving averages. So it's going to need some time. Here was your breakout, and then your gap down after earnings, so some people are trapped. But I do think at some point this rebuilds, and this isn't the historic high for Fitbit, just to throw out something to say. MBLY has pretty much, I think it survived about a lot of selling. A lot of selling came in after earnings. They tried to break the back of the stock like most things. This stock's had an unbelievable move since breaking its descending channel. Right here gave us a nice trade. Then it went back through highs here and got a little volatile, right, with the rest of the market. But, it's holding up there. With a little bit more time, I think that this could become a candidate for another new trade. I still think that this is a growth area. I think that this is a special name. And if you have it in the drawer already, keep it in the drawer. But overall, with a little bit more time, maybe above 58-ish, there could be a trade above 61 for this to, continue to the upside. This one, keep it on the radar. I probably should be trading it more. Looks pretty good. Then as far as social media, the landscape's really not special. That's what happens sometimes when you have a very small leadership group. All of a sudden, something looks like it's going to make a new high, and then it fails, and then all of a sudden it goes from looking awesome into a potential double top. And pretty much that's what happened here with Facebook. It's been best in breed. It's still fine, but here is your 21-day, which it's been trying to hold, and then this Thursday it did a breakout failure, which definitely put some fear into some traders. So with that said, it probably has to work it off. You had this red dog reversal where it pushed through this prior high of 97.09, went to the almost breaking out, and then failed. And now it came in a little bit. Now, what would be nice is if it just goes sideways for a little while, okay, and then just works off this candle and stays above the 21 days and continues to give us a leader to trade to potential new highs, because traders need leaders and so do markets. And at this point, this has given you times when, remember that this breakout failure after last quarter's earnings came in, rebuilt, and then you had a really nice trade here, back to highs. So we'll figure out what has to happen there. The rest of the stocks in this group are all broken. Twitter, ever since 2 quarters ago when they came out early and it broke this spot, it's never it just hasn't repaired since. And then you have no CEO, you have no management, no direction. The only thing that might be a catalyst is lower prices for potentially someone just to scoop them up. So, right around here, I think I started buying a few calls just to have, just in case something did happen. And I did the same thing with Yelp, but obviously that went worthless. On this day, into this area, I'm like, let me buy some calls just in case. I don't want to play this stock because the stock's broken and it's too speculative, but if something happens, maybe it's in that area. And instead, nothing happened and they went worthless. So, one of my rules is when you play something for a potential acquisition that's just speculation, don't sit in the stock because the stock can get annihilated. Sit in some kind of option strategy because, your risk there is premium paid. A group that kind of perked up recently that has my eye is some of the casinos. Years ago, if you followed me, I loved, trading LVS and WYNN and MGM, and for a while MGM was like a swing trade of mine from like $8 to $14, and then for the last year and a half they've been pretty broken. But now, maybe there's a trade there. You look here at LVS. LVS has been going sideways for a long time. This is when it broke the 200-day and said you got to get out of the way. Broke the the momentum levels way before that. And now it seems like you have this lower base where, you know, there could be a trade here above the 200-day and reclaiming it above 57. Maybe there'll be some volume attached and it could be good. I also think WYNN, which has been battered and bruised, you know, look at that move here just to show you how you could have gotten out of the way if you were an investor in WYNN also, is look at this support that broke. Huge support broke here right around 190, 200. So if you sold it there, you know, you have the chance maybe down here around 104, 105, you know, to play some kind of tradable bounce. I'm not sure if how big it's going to be or if it even happens, but it's going to be on my radar today to see if it could take out this inside range, which is right around 104.5. MGM, I can't believe I missed it. Look at the size of this move that happened. You know, this engulfing day right here, boom, it engulfed this entire range, and then you put a nice little bull flag, and there you are, you know, recently, not even really pulling back much. I'm not sure if I want to chase that one, but just shows you it could happen. You know, so in a big engulfing day, reclaiming all the moving averages, at least hopefully, you know, you covered your shorts, and now if you can go a little sideways, you know, maybe there's a move to the upside there. And then, you know, before I close it up, I'll give you a few other setups just that, you know, I might be looking at today. GPRO has been hanging out pretty well. I think it's worth a look. You know, this had an unbelievable move from when it became public. I remember trading it. It was so much fun back then, above the 8 and 21 day all the way until finally, you know, you had your reversal tail right there, and then it broke momentum here. And then ever since then, it's been just a trade. You know, fast forward to where we are now, after a decent earnings report, and, you know, everyone's away from talking so negatively about it or whatever, you have a tight little pattern here. So if it could trade above 64, 65, it's now above the 8 day again, the 21 day again. You know, here was your earnings gap. Perhaps, you know, you get a better trade there. So put that on your radar. And AMBA, another stock that was a nice winner. Sometimes trades with GPRO. It's getting tight here above this 115. Perhaps you get a trade back to highs. Looks, you know, somewhat decent. And lastly, you know, Warren was on TV today talking about his, you know, his acquisition, just about his strategy. I love Warren Buffett. He's such a great American and great, you know, the way he goes about not being a fearmonger and trying to keep people in the market long term and all those kind of things. You know, good for him. He's 85 years old and he's sharp as a tack. He mentioned IBM, and I dislike the stock a lot, but it seemed like when I was watching it, he kind of slipped a little bit saying, look for my filing. You know, it seems like they bought more stock. So if they didn't sell it, which some people were worried about, you know, so they bought it. So maybe there's some kind of bounce, and that bounce would probably even help the Dow and help, you know, the overall sentiment. So maybe you see some kind of trade from 155 back to 160, 161, you know, before this is all said and done. So here we are starting the week after, you know, a pretty volatile to down week or tough week for the bulls. You know, the question is, does this gap up hold? I think the China move kind of takes it a little bit out of the danger zone, which people were worried if China would crash and the Shanghai would make lower lows. Europe is acting well, and, you know, I think the more people look at potential liftoff, you know, they should feel that good news is good news versus, you know, wanting bad news to be good news, because that's just not the way to live life or in the markets. We've had that for way too long. So sectors are, a lot of them are mostly broken. Lots are below moving averages. We'll see what type of bounce we have this day or two. If, you know, we reclaim some moving averages, if some leaders start acting a little bit better, and figure it out from here. But if today's up open gets sold, or, you know, it's feeble in nature and then tomorrow's gets sold, you know, chances are next time we see that 200-day, you know, it could be a little bit more vulnerable, especially in the S&P. So I come in flattish today, and I'm going to try and figure out how I could play some of those setups for cash flow, and then figure out if the market's worthy of some type of range resolution to the upside. It feels so much like it should be to the downside, and usually when that's the case, it's been the opposite, you know, in 2015 especially. So this is your morning call. I'll see you at the recap. Have a great day trading.